Wall Street closes mixed on Wednesday following a hotter-than-expected inflation print. High petrol prices push U.S. consumer prices up 0.6% in August. Investors are divided on the Fed's next move as core inflation sees an uptick for the first time in 6 months. Stocks in the Asia-Pacific open higher, with the GIFT Nifty also suggesting a positive open for the Indian market. Oil prices hold firm above the $92 per barrel mark as a surprise build-up in U.S. crude inventories is offset by expectations of tight supply. Gold hits multi-week low on a strong dollar and uncertainty over the Fed's next move. Global debt burden retreats for the second year in a row, according to the IMF, but debt remains above the pre-pandemic level in 2022. The IMF adds that China played a central role in increasing global debt in recent decades. And two key IPOs open for subscription today. Fintech player Zaggle will launch its 564 crore rupee IPO today, while the Goldman Sachs-backed Sami Hotels is set to kick off its offer, including a 1,200 crore rupee fresh issue. RR Cable sees a total subscription of 25% on debut. Good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we have for you this morning. We've got that key macro data that we were awaiting from the U.S. as well, the CPI, which has come in hotter than expected. So it was a pretty mixed close for the U.S. markets, but you have all of the Asian markets which are opening with good gains. What's doing the best this morning is the Nikkei market. So that is up a full percent, holding up very strong. In fact, for the week so far, the Nikkei market has been the best performing. It's over 1.5% in the green. You have the Kospi also, which is trading well. So that's 0.9% higher. And Seng and Taiwan are on your screen. So both of these seeing around 0.8% of a move in the positive territory. So it's quite a strong open as far as the Asian markets go. The other ones, whether you have Straits or Shanghai, they're also seeing a little bit of green. So Straits is up 0.4%. Shanghai just about managing to hold in the green. But, you know, whichever way you look at it, this is a good open for the Asian markets. The GIFT Nifty will come up for you, and it is indicating that the start for our own market after the good session that we saw yesterday will once again be in the green. So 48 points higher is where we're at right now on the GIFT Nifty. So definitely looks like a positive start, and then we'll see how we really move from there. Once again, the broader market action will be extremely crucial to watch. But let's also talk about the US and the key data that came through, which is the inflation print. This came in hotter than expected, like I mentioned, in August. So we saw a rise of 0.6% if I look at it on a month-over-month basis. This is actually the biggest monthly gain that we've seen this year. And the core inflation remains quite a concern, rising above expectations of 0.3%. We have Rick Santelli, who's here to get us all of the details and the highlights from the US inflation print. Rick.
Yes, the main event, the Consumer Price Index for the month of August. Headline expected up an aggressive 0.6, and the economist and analyst delivered up 0.6, up 0.6. The last time we had up 0.6 on a month-over-month was going way back. You have to go all the way back to February of 2022 to find a bigger number. When it was up 0.7, actually in March it was up as well. So now if we consider that the high water mark here in 2005 was up 1.2, yes, we've made progress, but this follows up 0.2%. Strip out food and energy, up 0.3%. Year over year, up 3.7%. That is hotter than expected, hotter than the rearview mirror, and 3.7, the last time we were anywhere near there was up 4% in May. And if we look at year-over-year core, which in my opinion is probably the most important, 4.3%. Now, this is interesting. It's down from 4.7, exactly as expected at 4.3. But once again, let's go through the litany here, okay? We haven't been below 4% in this metric going all the way back to May of 2021. Last year, over half were above 5%. So this is still quite sticky. What has the market done? We've gone from a 431 yield in 10s to a 433 yield. So at 433, we're up a handful on the session. You can see that two-year note yields have moved up to 507, 508. Currently, the high yield close there is 508. These are very important technical levels.
All right, Rick, thanks a lot for getting us all of the details as far as US inflation print really goes. That is very critical to watch. But on that note, let's also listen in to Emily Gee, who is the Senior Vice President of Inclusive Growth, talking about this inflation print that came through, all of the trends as well that we're seeing in the US.
We do expect some month-to-month increases or decreases, just like the stock market. But the overall trend does show us that inflation remains moderate. Just for sake of comparison, last year at this time, we were at an 8.3 annual inflation rate. And we are seeing prices for some core consumer goods like chicken and eggs and used cars actually come down in July. But I do think that it's important that we keep watching the unemployment numbers as well. We're seeing steady and healthy and sustainable growth in jobs, but we'll also, we think that the Fed should proceed with caution as it considers future rate hikes to make sure that we aren't, raising rates too high and possibly sending the economy into recession, which would be the worst thing for workers.
All right, so that is an important reaction coming through on the inflation print. But with that, let's also talk about how the US markets really moved on this news. We did have Wall Street, which ended the session quite mixed. So the Dow was down around 70 points. It ended around 70 points lower. But if you look at the fall from the highs, it was nearly 200 points that we saw on the Dow. The S&P 500 also closed with, a little bit of a gain coming through, just around 0.1%. And the Nasdaq also around 0.3% in the green at the close. So this is how the US market really closed yesterday. But with that, we are going to get into a short break now. On the other side, we're going to focus on all of the cues that we need to track from our own markets, from the commodity markets. So stay tuned and we'll bring you all of those updates. Welcome back. You're still tuned into Power Breakfast. Now, we've gone through the global market setup, but let's now talk about all of the domestic cues that you should track, as well as some of the individual stocks that can react to some news flow that came through. So we have Vivek and Surbhi joining us to prep us up for this trading session. Guys, a very good morning to both of you. Vivek, let me come to you first. That key, cue that we were tracking from the US markets in terms of the inflation print is out of the way, but take us through everything that we should watch in terms of the cues today for our own markets.
Well, absolutely. Good morning. What we are looking at today is whether Nifty can sustain the rally despite, the kind of mixed cues that we are getting both in terms of data as well as in terms of the global equity handover. Like you mentioned, US markets gave a mixed close, but, oil prices yesterday, they cooled off marginally, but continue to remain, hovering around the 10-month highs. So WTI futures now closer to the $89 a barrel mark, and Brent futures now closer slightly above the $91 a barrel mark. Yesterday, Indian markets, staged a very sharp recovery intraday, and the Nifty continued to hold above the crucial 20,000 level. The bigger story, of course, was that, there were fears whether the mid-cap and small-cap index that saw a sell-off in day before yesterday's trading session, whether that particular sell-off continues. While, they did see a bit of selling pressure, they too staged a very sharp recovery in the last hour of the trade, and that continues to remain the story, and that continues to remain the key trend that we need to watch out for today. The pharma stocks, especially the Nifty Pharma Index, was the top performer. And in terms of DII and FI activity, the trend continues. So DII continues to remain buyers, close to 850 crores of buying in the cash market yesterday. FI has, however, sold over 1,600 crores. Primary market activity continues to remain very buoyant. Two fresh IPOs today, Zaggle Prepaid Ocean Services, as well as, Sami Hotels. Both of these IPOs open up for subscription today. RR Cable, that particular IPO, yesterday was day one. It was subscribed close to 25%. Asian markets and Gift Nifty, key to track today, mostly positive. So hopefully, we get a gap up start for our own markets today as well.
All right, let's see how it goes. For now, it is definitely indicating a good start, 45 points higher on the Gift Nifty. Vivek, thanks a lot for getting us all of those cues. Surbhi, coming to you now, take us through some of the stock-specific action that came through that we should, watch today.
Good morning. So the first one on my radar is Bombay Dyeing. They're going to monetize the land parcel at Worli for 5,200 crores, and they're going to sell this land to an arm of Sumitomo Realty. Next is Indigo. DGCA sources confirm that Indigo has been allowed to wet lease 11 A320 aircrafts. IRCTC, the company has signed an MOU with the Maharashtra State Road Transport Corporation to enable online bus booking services. Adani Enterprises, the Adani Wind gets certification for its 5.2 megawatt wind turbine generator. This certification will enable the company to start series for the global markets. Bajaj Healthcare, the company receives an establishment inspection report from the US FDA for its API manufacturing facility in Gujarat. Kirloskar Ferris, NCLT New Delhi approves a resolution plan for the corporate debtor Oliver Engineering. And lastly, NBCC, the company bags an order worth 180 crores from SAIL.
Okay, that is some important stock-specific news. Surbhi, thanks a lot for that entire list. We're going to watch for all of these in today's trading session. But moving on now to another important story. Global debt has continued to decline for the second consecutive year. This as per the latest update to the IMF's database. Now, global debt has fallen 10 percentage points of GDP to 238% in 2022. But the IMF has raised a red flag pointing to a rising trend in debt burden. So Ritu joins us with all of the details and highlights from this report. Ritu.
The global debt burden retreated for a second year in a row, even though it remains above its already high pre-pandemic level. That's according to IMF's latest global debt database. Now, the total global debt stood at 238% of global GDP in 2022, which is 9 percentage points higher than in 2019. In US dollar terms, debt amounted to $235 trillion, or about $200 billion above its level in 2021. But debt sustainability is a big question mark, and that's why IMF has called for policymakers to be unwavering over the next few years in their commitment to preserving debt sustainability. Now, despite the economic growth rebound from 2020 levels, fiscal deficits have kept public debt level elevated as many governments spent more to boost growth and respond to food and energy price spikes. As a result, public debt has declined by just 8 percentage points of GDP in the last 2 years, offsetting only about half of the pandemic-related increase. Private debt, which includes household and non-financial corporate debt, declined at a faster clip, dropping 12 percentage points of GDP. But even then, that decline was not enough to erase the pandemic surge. China has played a central role in increasing global debt in recent decades as its borrowing outpaced economic growth. Its debt as a share of GDP has risen to about the same level as in the United States, although in absolute terms, the debt for China is much lower than the US. Lastly, IMF has warned that more than half of low-income developing countries are in or at high risk of debt distress, and about 1/5 of emerging markets have sovereign bonds trading at distressed levels.
All right, Ritu, thanks a lot for getting us all of these details on the global debt picture and what the IMF has to say about it as well. But with that, it is time for another short break on the show. When we come back, we're going to shift focus, talk about all of the cues from the commodity markets. It is once again crude, which is making headlines. So we'll talk about that when we come back. Welcome back. You're still tuned into Power Breakfast. We've gone through all of the equity market action. So let's now talk about how things are looking on the commodity side as well. Manisha joins us with an update. Manisha, we have crude, which continues to hold above $92. But take us through any interesting developments that, we saw overnight on this.
Thank you for that, Pavitra. Well, yes, we continue to hold near a fresh 10-month highs, and we have seen the crude oil prices gain up by 3% on this week. So the OPEC is projecting a strong global demand growth in 2024. They also are estimating a fourth quarter deficit at 3.3 million barrels per day, which is much higher a number than other agencies, and that in turn has been supportive for the crude oil prices. But remember, the dollar index is trading at around 6-month highs. Markets also are waiting for the U.S. retail sales and the China industrial production numbers. These two data is something that most asset classes are looking for right now. Apart from crude, it is the metal prices which has seen a bit of a decline. So copper has come off its highs. Nickel prices are trading near 13-month lows as well right now. It is about a slowdown in EV demand in China that's weighing onto the markets. Here as well, it's going to be the ECB monetary policy meeting that is today. So loads of data slated for today and tomorrow, and that will keep all of these markets quite choppy.
All right, Manisha, thanks a lot. We are going to keep coming back to you through the day as well to, keep getting updates on this space. But for now, let's move on and talk about some very tragic news that came through. At least 8,000 people have been killed and thousands more reported missing after devastating floods in Libya. So rescuers have found more than 2,000 bodies as of Wednesday after around a quarter of the city of Derna was wiped out as two dams burst, sending floodwater into residential areas. Now, according to the UN Migration Agency, the flooding has caused significant damage to critical infrastructure in the coastal city of Derna as well and displaced at least 30,000 people. The agency also said that the damage is so extensive that the city is almost inaccessible for humanitarian aid workers. So those are some of the visuals coming through. Extremely disturbing and unfortunate news coming through from Libya. We're going to keep bringing you updates on this through the day as well on any kind of rescue operations that are on. But with that, we're going to have to wind down in this edition of Power Breakfast with the news that the Asian markets are well in the green. The GIFT Nifty also implies that we're going to be around 50 points higher at the start of the trading session. So let's see how things move from there. Thanks for tuning into Power Breakfast. We have Bazaar Morning Call up in 2.